Good afternoon, everyone. Welcome to the Daily Recap. I'm Laz. Let's take a look at the market today. We're going to look at some earnings stocks and some general indexes. First, let's take a look at, I think, the big earnings call of the day here. Goldman Sachs, one of the most widely watched banks. And, going into earnings, you can see here, Goldman, has been on a nice run. We broke out from 120. We're now trading 140 post today. We came in this morning with a bit of a gap up on their earnings. And if you look intraday here, the trade didn't really, let me actually just fix this chart here. The trade didn't really amount to much, but by 11 o'clock into the lunchtime hour, we saw that, that breakout of the early morning range. A lot of sort of posturing here in the first hour and a half of trading. And when we finally broke that morning high, you can see we saw a nice trade there. So some of the traders in the VTF were all over this one today. Later in the afternoon on the breakout, and the banks are leading us. If we go back to that daily chart, you'll see Goldman, J.P. Morgan, Wells Fargo, Bank of America. These stocks all have continued to perform and continue to perform for that effect. Whereas pull-ins are buyable events, and pull-ins continue to pop and make new highs. So obviously, as we get into earnings season, we're going to keep an eye on the banks to see how they do as each one comes out and reports. But right now, that's where money flow is. That's where money flow has been. So you need to keep an eye on that sector for leadership. Clearly leading this market. We look at the actual market. We'll take a look here at the SPYs. So SPYs are an interesting type of trade right now. Not really seeing a whole lot of momentum. Early in the year, actually the first trading day in the year, the fiscal cliff resolve, market saw this very large gap in price, and it has been a slow grind higher. We haven't really seen a whole lot of momentum in this trade, but to that effect, no sellers to be found anywhere. It looks like we are, again, just a stone's throw off of the back from September, the September highs, just above 148 in the SPY. And it looks to me like we're going to, the market's going to inevitably try and test this level. Whether we break out or not remains to be seen. The Russell, we take a look at the IWM. The Russell index here, again, the ETF for the Russell, clearly leading as we already, as it has already broken to new highs, through last year's highs. So the Russell clearly leading this move, and the S&P is actually right now on the laggard side, but still, very, very bullish overall in its structure. We now have a clear rising 8, rising 21, and a stock that has, or an index rather, that has consolidated over the course of the week. Take a look at the weekly here. You can see so far this week, as we get into the latter part of the week, Thursday and Friday, very, very, very small candlestick to date. The range this week far smaller than any of the prior ranges we've seen on the weekly bars. Now there's still 2 days here left to close out the weekly bar, but again, worth keeping an eye on this as the range continues to contract. We can see this picture most clear in an hourly chart. This is a 60-minute chart, and you can see this week. You can see just the sort of that really controlled price movement here. This is an hourly chart of the spiders, and very much in a range here so far this week over the last couple of sessions. So we are continuing to monitor this for some more upside, as there's been no selling, but we really haven't been able to power through these highs. So we're keeping an eye on both the bigger picture as well as the shorter term picture for traders at these levels. What else can we talk about? Well, we can talk about Apple. What would be a day if we didn't mention the stock? Yesterday breaking down below that 500 mark. That's been, an area of support. Today, closing on the lows yesterday. Today gapping up and trading right back to that 8 EMA. So still a little bit of a whipsaw in here. I'd like to see how this stock acts here on a bounce. Now, as you know from prior recaps or morning calls, what would be a recap if I didn't give a little education? Usually when a stock breaks a key support level, and we're going to call this one a key support level. Why? Because it's been tested multiple times. It's been tested here, it's been tested here, it's been tested here. So it's proved to be a level that has been very noteworthy in the stock. Well, yesterday and the day before, we undercut that level. So we took out support. A lot of times when you take out support, you'll get a trade down. Then the stock will snap back. And then eventually when it does turn down again, that's when the actual trade essentially starts to happen. So if the stock's going to go lower, the way I would look at this is I would watch to see if it can trade a little higher, possibly into the 21 EMA, which is about 520 to 522, and then see how it reacts off of that moving average. You have this gap, this big open gap from a few days back, which gets filled around 520. So it seems to me in the short term we might snap back, and then I would watch to see how price reacts. That'll be key for me. I think Apple overall becomes, changes in terms of structure if it can power through, let's say 530, 532. If it can really get above that level, this could essentially be a failed breakdown. So I think the next couple of days are going to be very pivotal here in terms of, will we see more weakness, more selling? And as the stock gets closer to earnings, again, expect the unexpected. For me right now, and for a lot of traders on the VTF, it's a day trade only instrument. There's big ranges in the stock every day, so there's always that one or two intraday trades that it gives you. And again, that's really the value of the VTF right now, is you're getting some of that short-term color that really has proved to be very, very powerful in this market, a market that has been overall strong, but not really, hasn't really given us a lot of momentum. Some other names that I think are, notable that have sort of that story attached to them. This is Herbalife, and Herbalife, what was a dog as a matter of 2 weeks ago, now has, recaptured, pretty much that entire down move. Probably, ready for some more selling here as it's snapping back into prior resistance. Probably ready for, a larger drawdown here, maybe a trade back to the, mid to high 30s before then, potentially deciding what it wants to do after that. Along with that, NUS, New Skin, again, following suit in that Herbalife trade, big panic selling, followed by this, snapback trade. And obviously the faster they fall, the harder they fall, the more likely they are to, snap back. So keep an eye on that trade as it develops. Amazon, another one that's been sort of that darling in the tech world, breaking out a few days ago here, but contracting over the last 2 days. Not so much in terms of heavy selling here. Probably just another controlled pullback, testing support, and I suspect you might see some more upside here in the next day or two. So I would keep an eye on that for a possible entry if it's going to continue higher. Obviously, as as these individual names get closer to their respective earnings dates, make sure you know when your stock is reporting earnings. That is a golden rule, as you don't want to be, holding stock into earnings, especially some of these more volatile names. These big cap tech names. Very, very risky proposition, as you saw today with CMG. Obviously, CMG doesn't quite have the same structure it once had, and gapping down today at the open about 20 to 25 bucks. Recouping most of it throughout the course of the day, but again, very dangerous proposition to hold stocks into earnings. CRM, another one, Salesforce.com, seeing some big selling today on some heavy volume. So we'll keep an eye on that as we go forward. Right now, I think as we get into earnings season, it is a very earnings-driven trade. You got to keep your eye on the banks. The banks are leading. That's where money flow is. As far as big cap technology stocks, it is a little bit more of a mixed bag. You're seeing some pockets of strength, some pockets of weakness. I believe eBay, if I'm not mistaken, eBay had earnings, although you can't see it here. Let's take a look. Here's eBay in the post-market. Yeah, it looks like, eBay down a little bit here in the post-market. Closed around 53, trading right now on the, low 52. So down a fraction here. So again, you got to, if you're going to trade earnings, make sure you, are technically sound in your principles. A lot of the trades right now are still day trades. It's a cash flow market. Obviously, if you're in certain sectors where, they are trending higher, like the banks, you can stay with those trades for longer periods of time. But the one thing that I will say is, the trades that tend to work best from a swing trading perspective are the ones that have good alignment. Good alignment, what do I mean by that? In the Active Trader course, we teach stocks that have rising 21 EMAs on both the daily and the weekly. So if you take a look at a stock like Goldman Sachs, you have a rising 21, which is that red line right here on the daily chart, and on the weekly chart, again, a rising 21 EMA. Those are stocks that generally, provide the best tradable situations for those seeking, trades that last longer than an intraday, an intraday momentum type of trade. And on the flip side of that, you look at a stock like Apple. We look at the daily, where you have a declining 21 from left to right, declining in price on the daily, and the weekly, a declining 21. So you're seeing that same trade in the other direction. So the key to finding good, good swing trades that you can stay with for longer periods of times, it's finding the stocks that have good alignment, meaning they're both aligned on the weekly and the daily. Those are the ones that tend to be, in the bullish case, buyable on pullbacks, or shortable on bounces. So keep your eye on that basic structure. And again, that's trend trading 101 in terms of what we teach in our active trading program. And again, the market has provided opportunity both for the day traders and the swing traders, for those that are in the right the right spots. As always in earnings season, make sure you know when your symbols are going to announce. You don't want to be caught sort of holding an empty hand. I know some traders got stuck in CMG, and things tend to happen. But that is the nature of this business. As always, tune into the VTF each and every day. There's always a handful of good, actionable trade ideas and trade alerts. This morning, I know for both the active trader room and the momentum room, we were in that Herbalife into resistance, very calculated day trade, mean reversion, looking to short into prior resistance. And we did, for the better part of the day, you did get, here's a 5-minute trade, you did get that momentum trade to the downside. So you pick and choose your battles in this market. It is pivotal to your success. Make sure you are planned, because when you are planned, much higher odds of being profitable. As always, I'm Laz. Have a great night, and I'll talk to you tomorrow.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Hi, I'm Sean Hendelman of T3 Live.